Let's try and understand all the dynamics with the sugar sector right now. Atul Chaturvedi, Executive Chairman at Shree Renuka Sugars, joins in right now. And we'll also have with us Vijay Banka, the MD at Dwarikesh Sugar, joining in just a second from now. But Atul, hi, good morning. Let me start off the discussion with you. With rising global sugar prices and a weak rupee, how are export opportunities looking like for the sugar industry?
I think India is really in a sweet spot. We feel that till March, our exports should be in the region of about anywhere between 5.25 to 5.5 million ton. And if we take into account the full season, I'm sure there's no reason why we should not be able to hit the magical figure of about 7.5 million tons. So I think India is probably one of the most competitive source for exports as of today. And coupled the rise in the crude prices, which is affecting freight markets, I think India is ideally placed to take care of the requirement in the Middle Eastern markets and the East African markets, which we are actually fulfilling. So I think it's a good sign, and India would be in a position to get rid of the surplus sugar which they've been carrying for last 3-4 years. And our stock levels would probably come down much more manageable levels of about 3 months of consumption levels by the time we finish this crush season. Yep.
Yeah, that. Vijay, hi, welcome on board. Vijay, just taking a leaf from what Atul just explained. Clearly, to say that sugar is in a sweet spot seems like an understatement. Things seem to be pretty, going pretty well. You've got the tailwind of the weaker currency, and that's really aiding exports as well. Tell me in specific, have you entered new export contracts recently?
Very good morning. No, we have not entered into any new export contracts recently. We did exports at the beginning of the season. We contracted to export about 25,000 metric tons, and which has been completed. Now, the surge in the exports that you have seen, and which is likely to touch the magical figure of 7.5 million tons. Most of the exports have come from the states of Maharashtra and Karnataka. Because we are in the state of UP and in the hinterlands. So for us, the transportation costs are a little higher. Additionally, sugar sells at a little higher price in the northern states. So for Maharashtra, the comparison between export price realization and the domestic sale price realization is kind of favorable. So a lot of enthusiasm has been there in participating in the exports from these two states. And as Mr. Atul said just now, we have already completed the figure of about 5.5 million tons of export, and contracts have been already signed for about 6.5 to 6.8 million tons of sugar, and there's no reason why we should not be doing 7.5 million tons of export. It augurs well for the industry. We have seen heavy stock levels in the past. In fact, about 2 years ago, yes, the stock levels were at a high of 14.6 million tons, and we have seen some reduction from there on. And by the end of this season, we should see stock levels of less than 7 million tons, which is more or less equivalent to three months of consumption, which is good, pretty much good for everyone. There cannot be runaway increase in the sugar prices, but the prices will be reasonable and reasonable enough for the sugar mills to perform well.
Atul, if I could, come in on the pricing trends right now. Tell me how the pricing trends looking for both international as well as the domestic markets, and will sugar prices rise further as globally, sugar is still pretty much in deficit?
In fact, we were all anticipating that the Brazilian gasoline prices would probably see an upward move. And that upward move actually came in yesterday, and they jacked up the gasoline prices domestically by about 18%. And at 18% gasoline price increase, the sugar equivalent New York comes to about 20 cents, which at the moment is about 19.1. So we feel there's a little more of upside as far as international sugar prices are concerned. And again, that's a sweet spot for India because, as you rightly said, the tailwind in terms of weaker currency, all these are going to give much more fillip to the export program. And I would go to the extent of saying that India is actually blessed in terms of all agri-commodities, whether it be wheat, whether it be rice, whether it be sugar in terms of exports. And I wouldn't be surprised if this year our overall export numbers are much more, probably one of the highest ever in the history. Coming to the domestic market, we feel that with surplus sugar moving out of the system, domestic prices should be reasonably well supported, but I don't see the sugar prices running away because we have adequate stocks available both in Maharashtra and Karnataka as well as in UP. In fact, Maharashtra this year has seen a huge crop and the crushing operations are still on. Even in our mills in Karnataka, I'm a bit surprised that we are still able to run. So there should not be any problem in terms of the sugar availability in the domestic market. Maybe the markets might move up a little. Nothing much to worry about.
You know, Vijay, you just heard out Mr. Chaturvedi saying that he wouldn't be surprised if the export numbers are going to be the best ever this time. Are you getting a similar sense?
Yeah, absolutely. Absolutely. I mean, well, I would go to the extent of saying that yes, in adversity, when there is a raging war between US, Russia, and Ukraine, that's given us an opportunity to export a lot of wheat. So we see the export numbers, particularly in food commodities numbers being pretty good, and we have sensed an opportunity in adversity, and that's good for the country.
BJP now winning the elections in UP, the street is expecting that the existing sugar policy is going to continue. Is that what you're penciling in, and what kind of revenue and growth potential are you seeing from the domestic markets?
BJP coming to power in the state of UP government augurs well for the industry. It always makes enormous sense when the government at the center and the government at the state level is of the same party, because the policies can be seamless and there will be no contradiction or conflict. And we have seen both the governments, central government as well as the state government, supporting the industry. This will obviously enable the sugar mills to pay the sugarcane price on time, and the cane price payment position is pretty good this time. So it's always good that the central and the state government are of the same party. State government has also, the policies evolved over the last few years, have been pretty good for the sugar industry, and same is the case with central government. The central government has correctly identified that surplus sugar production, which is a phenomenon which will prevail for long times to come because of the attractiveness of sugarcane crop. So that needs to be addressed. So export has given a good relief to the sugar industry, and so has the ethanol blending program. Ethanol blending program is here to stay, and it is going to support the industry for all times to come. We will see sugar stocks being maintained at reasonable level. So it all augurs well for the industry, and we should see sugar companies performing good. Those who are fully integrated or rightly integrated, they should do well. And I think things are heading in the right direction.
Chaturvedi, would you concur? What's the view on the ethanol blending policy, and how, the win of the BJP in the state elections, what that's going to do to the existing sugar policies?
Is that question to me?
That's right, Mr. Chaturvedi.
Yeah. No, in fact, I would go to the extent of saying that this ethanol blending policy of the government has been actually a game changer as far as the sugar sector is concerned. And I won't possibly be off the mark if we start calling sugar sector as an energy sector. So now it would be better to call it an energy sector, or more particularly call it as a energy sector. Now, if we look at the crop numbers and the production of sugar this year India is actually going to be producing something like 37 million tons, out of which about 3.5 million tons is going to get diverted to ethanol. and about 33.5 or thereabouts is going to be in the form of actual sugar. Volumes will keep growing as far as the sugar is concerned because the farmers' returns to the farmers are probably one of the best compared to the competing crops. So we have found a way to get rid of the surplus sugar, and the policy on and the thrust on ethanol. I would probably say that it's environmentally friendly, politically acceptable, and commercially a viable proposition. So there's no reason why ethanol thrust should be reduced. And the other thing is that our Prime Minister is quite sold out on green energy thing. And he's committed to carbon neutrality by the year 2070. And this is a step in the right direction because ethanol actually reduces carbon emissions. So I think we are on a safe wicket as far as the sugar sector is concerned. And I'll again reiterate, we should start calling it the energy sector instead of just calling it the sugar sector. Back to you.
Indeed, it's turning out to be, isn't it? But Mr. Banka, India has already achieved 8.1% ethanol blending already. The target is of 20% by 2023-2034. Does that appear to be on track? And walk us through how things will stack up if the target is achieved in terms of revenue potentials as well as margins too.
8.1% was the number for the last season, and now we have seen blending percentage reach up to 9.34%, and we should see improvement in the blending percentage. I'm very hopeful that we should achieve a blending percentage of 10%, and going forward with the international crude prices rising, I'm sure there will be acceleration towards moving to E20. The target date is 2025, but I see the government, the oil marketing companies, as well as the sugar companies ramping up the capacities, distilleries, and even the grain distilleries also coming up in a big way. So all this, I'm sure, if not 20%, we will be closer to that number in the before the target date. And you see the sales mix of the sugar companies already undergone change, and it will undergo big change in the times to come. Typically, sugar companies would achieve about 90% sales from sale of sugar, and the rest would come from power sales or ethanol sales. But already we see this percentage of ethanol sales going up to 30 or 35 in the coming years. So the sales mix is going to be good. It will be good in the sense that the margins will be better. There is improved viability of sugar companies. The ethanol has given the right impetus. So as Mr. Chaturvedi said, yes, we are on the cusp of being called an energy sector rather than a commodity sector. Things look pretty much good as of now. And there might not be a big increase in the top line, but because of the good and healthy sales mix, the bottom lines can be better. Top lines also can be better if the companies ramp up their capacities. They expand their sugar operations as well. But definitely the sales mix is going to help the margins in the times to come.
All right, Vijay and Mr. Chaturvedi, thanks very much for joining in on that positive note, giving us a view on the sugar space, better opportunities for exports, better margins, the overall policy environment as well looking robust and on the cusp of being called the energy sector.